The Andrews Pitchfork is a versatile technical analysis tool that can be applied to various market events to help traders identify trend channels, potential reversal points, key support and resistance levels, and much more. In this video, I'm going to show you 8 ways in which the Pitchfork can be extremely helpful in order to find high-quality trade opportunities. Before we begin, let's quickly review the right way of drawing the Andrews Pitchfork. To draw the Pitchfork correctly, the trader must find 3 significant and alternating price extremes, since the fork has 3 axes called A, B, and C respectively. If the first axis is a low, the second must be a high, and the third must be a low. If the first axis is a high, the second must be a low, and the third must be a high. That's what the expression alternating price extremes mean. With that said, we can move on to the 8 ways of using the Pitchfork effectively in your trading. Number 1. Establishing trend boundaries. Establishing trend boundaries using Andrews Pitchfork involves identifying the primary trend direction and then plotting the Pitchfork tool to capture the trend's essence. There are a few useful steps you can follow in order to do that. Number 1. Identify some sort of trend using phase analysis methods like Elliott wave, Dow theory, or Wyckoff. Number 2. Apply the appropriate Pitchfork type. Number 3. Analyze how price behaves in relation to the Pitchfork. In this chart, you can see an example of a downsloping Pitchfork drawn in the 1-hour time frame of the Euro-USD. The Pitchfork found using the points A, B, and C set the boundaries of price motion for the rest of the downtrend. This example is actually more nuanced since it's the combination of a modified shift Pitchfork and some sliding lines, which are the white lines that follow the angle of the Pitchfork on the way down. These lines are based on the overthrows and underthrows of price in relation to the Pitchfork lines. Notice how when price meets the sliding lines from below, we have a potential trend continuation signal, and when the price meets the sliding lines from above, we have a potential trend reversal signal, which can also be seen as an exhaustion signal for the current trend movement. The interesting thing here is to observe how the angle of the Pitchfork that was found in points A, B, and C captures the overall angle of the rest of the trend. Like other phase analysis methods such as Elliott, Dow, and Wyckoff, Pitchforks can also provide some sort of roadmap for price action. Beyond using the Pitchfork lines to identify potential continuation and reversal points, the trader can use these lines as a proxy to set dynamic profit targets and dynamic stop-loss orders too. Traders should also use other technical analysis tools and indicators to validate their trading decisions and manage risk effectively. Practice and experience are key to mastering the application of the Andrews Pitchfork in trend channel analysis. Number 2. Confirming support and resistance levels. Pitchfork lines can be used as dynamic support and resistance levels in technical analysis. These lines help traders identify potential price levels where the market may experience reversal or exhibit significant price reactions. This also means that these lines can act as auxiliary tools in the confirmation of other types of support and resistance lines. For example, in this chart we have the 1-hour time frame of the S&P futures. We can easily detect a support line coming from a major low in the chart. Later on, when price comes back to the support, the trader can use the Pitchfork to detect the chances of the support holding price action. In this next chart, there is an example of Pitchfork we can draw for that purpose. Notice how the lower line of the Pitchfork intersects perfectly with the horizontal support line. Price action touches that level precisely and then reverses to the upside as expected. In this other chart, we have an example of the same idea, but this time we can observe a resistance line in the 30-minute time frame of crude oil futures. Notice how price action meets the resistance line that comes out of the B-axis at the same time that it reaches the median line of the upsloping Pitchfork, signaling a bearish reversal in this case. The Pitchfork is a great tool that not only can work as support and resistance by itself, but it can also help confirm other types of support and resistance like we just saw. Whenever we see different types of support and resistance intersecting, we have a higher chance of price reacting strongly in comparison to when price encounters just one type of support and resistance. This relates to the idea of integration within the realm of support and resistance lines. Number 3. Channel breakouts. Traders can use the pitchfork to identify potential breakout points when price action breaches the boundaries of the channel. Such breakouts may signal significant price movements. A bullish breakout occurs when the price breaks above the upper parallel line, signaling potential upward momentum. A bearish breakout occurs when the price breaks below the lower parallel line, indicating potential downward momentum. To confirm a breakout, consider using other technical indicators or confirmation signals, such as increased trading volume or trend trading techniques, for example. Look for signs that the breakout is not a false signal, which can happen when price briefly breach the channel boundaries but then reverse. It's wise to wait for candlesticks to close before assuming they have indeed broken the pitchfork lines. Here we have an example of bearish breakout in the 4-hour chart of the British pound. Notice how price action almost hits the median line and then proceeds to break the lower line of the pitchfork, signaling bearish momentum. It's always wise to confirm these breakouts since you can find many instances where fake breakouts will occur. One of the many ways of doing that, in this case, is by observing how price action respects a resistance line after the bearish breakout occurred. What follows is a significant downtrend that validates the bearish breakout. In this other example, using the same market and time frame, we can observe a bullish breakout of a smaller pitchfork. Notice how price action meets the median line perfectly and then breaks out of the upper line. A few candles later, the pitchfork reacts to a small support line that helps confirm the bullish breakout. What follows is an uptrend whose beginning could be difficult to pinpoint without the aid of the pitchfork. Number 4. Divergence Confirmation. The Andrews Pitchfork can be valuable for spotting potential trend reversals when price action encounters one of the pitchfork lines while displaying some sort of divergence signal observed in a technical oscillator like the RSI, for example. In this chart, we can observe the 5-minute Australian dollar versus the Canadian dollar displaying a simple bearish reversal divergence signal, meaning higher highs in price with corresponding lower highs in the RSI. At the same time, we can see price reaching the median line of a modified shift pitchfork. Price validates the divergence signal right after hitting the median line. In this other chart, we have the daily New Zealand dollar, where a bullish reversal divergence, which is marked by lower lows in price and higher lows in the RSI, is validated when price meets the lower line of a doubled modified shift pitchfork. Divergence is a very reliable type of trade signal, but is not devoid of challenges. One of the biggest challenges is knowing when price action will indeed reverse once it's in divergence price territory. The pitchfork can be a great ally in that regard, since it can pinpoint areas where price is too stretched out. Number 5. Elliott wave confirmation. Using Andrews Pitchfork in conjunction with Elliott wave analysis can provide a comprehensive view of potential price trends and turning points. Elliott wave theory is based on the idea that market prices move in repetitive wave patterns, and the Andrews Pitchfork can help you identify trend channels within these patterns. The first step here is to perform an Elliott wave count. In this chart, we have the 3-hour chart of the Dow futures. We can see a 5-wave pattern in blue, where wave 3 in orange is extended as usually happens. If you don't know how Elliott wave theory works, I have a free course here in the channel. The pitchfork you see uses the beginning of wave 3, the end of wave 3, and the end of wave 4 as the A, B, and C axes respectively. This fork is intended to predict the end of wave 5, which it does perfectly at the median line in this case. Number 6. Manipulation confirmation. The pitchfork can work extremely well with the basic manipulation pattern, where large traders deceptively break a price extreme with the intention of triggering liquidity to enter the market without generating too much attention in the opposite direction that most retail traders anticipate. In this chart, we have an example of the 1-hour Nasdaq futures, where a high is deceptively broken to the upside. However, price fails to close above the high, leaving a prominent upper shadow in the candlestick where the breakout occurred. By drawing a standard pitchfork and then doubling it to the upside, we can see how the upper line of the fork catches the upper shadow of the manipulation. We can take this a step further and use another pitchfork as a high precision trigger for a short position after the manipulation. The red pitchfork in this next chart shows how price action comes back to the upper line of the pitchfork after the manipulation, and then proceeds directly to the median line. Number 7. Cycle analysis. The pitchfork can help traders identify cyclical price patterns and potential turning points. There are several ways of identifying price cycles, but one of the easiest ways is to visually inspect highs or lows that have regular intervals of time between them. To understand this practically, check out this 15-minute chart of the Euro USD. By measuring the time length between these two lows using the cyclic lines tool, we can notice how the rest of price action respects the same cycle, meaning that major lows occur when the time cycle repeats. We can use the pitchforks to help confirm the major lows found in the time cycle lines. In this chart, you can see how one of the possible major pitchforks help confirm the price reversal at the cycle line in the green circle. Price even comes back to the lower line of the pitchfork right after to provide a secondary entry to a possible long trade. This pitchfork would also be good for detecting a dynamic profit target at the upper line in this case. Number 8. Chart pattern confirmation. The Andrews Pitchfork can also be useful for those who like to scan for classic chart patterns, meaning that we can use the pitchfork lines to help validate the reversal points outlined by chart patterns, or even enhance the entry points of the common chart patterns in a few cases. In this chart, we can see an example of the median line of the pitchfork confirming the end of a V-top pattern, meaning that price exhausts its energy exactly at the median line in this case. In this other image, we can see an interesting scenario where price action breaks out of the major pitchfork and then tests it on the outside, just like what happens with normal support and resistance lines when they are switched. In other words, the major pitchfork helps confirm the V-bottom pattern even when price action is not constrained by the fork lines. This example has yet another interesting detail, which is the fact that we can find an Elliott wave pattern. Notice how the low of the V-bottom coincides with what appears to be a wave 5 testing the outside of the upper line of the major pitchfork. We can also use the pitchfork to enhance the application of common chart patterns who are known to have late entries. For example, in this chart you can see the 2-hour time frame of gold futures. The orange lines highlight the famous inverted head and shoulders pattern, and the green line is the neckline, which shows the place where the pattern is confirmed. However, notice how the breakout of the neckline happens well into the uptrend, meaning that it's a very late entry. We can use the pitchfork to predict the pattern as it develops instead of waiting for confirmations that happen too late. For example, using prominent market extremes, we can use a pitchfork to anticipate the termination of the right shoulder, as you can see in this image. This provides a much better use of this pattern in comparison to the classic entry that happens after the breakout of the neckline. Using pitchforks like this requires that the trader observes the real-time formation of chart patterns, which is a little harder than spotting them when they are completed. In this other image, we can see an example of another pitchfork giving a secondary entry, which happens after the previous entry outlined by the other fork, but it's still a lot earlier than the classic entry given by the chart pattern. Chart patterns have got a bad reputation because they tend to yield entries that happen too late. But if we align them with pitchforks in this way, they can be surprisingly useful. In this video, you saw 8 ways in which the pitchfork can be useful. But make no mistake, there are many more secrets and details about these tools. If you like this video, I have a whole playlist of pitchfork videos here in the channel that you can check out in the video description. That's it for this video. If you like this content, you can learn how to trade by getting my premium courses available in the video description. You can find more information in my website fractalflowpro.com or send me an email directly at support@fractalflowpro.com. If you like videos like this one, please help support the ongoing creation of content like this by clicking the like button, subscribing to the channel, activating all notifications, leaving your feedback below in the comment section, and sharing the video with your trading community. Thank you very much for watching, and I hope to see you in the next videos. Take care.